Chalo, hopefully this should run. Anyways, last we did was question 25, which was a bear call spread. Yeah. Now, voice is not audible. ये क्यों? Bhakti says it's audible. Vivek, I think then something wrong at your side. Zoom na, has gone berserk now. We are facing so much problem. Vivek, can you confirm? Sorry, Vivek is not able to hear me. Anyone else facing audio problem? Or am I audible? Can someone else also confirm, please? Audible. Okay. So I think Vivek, एक minute, let me just type him some message. Vivek, some problem at your end. Guys, let's give a couple of minutes to Vivek, otherwise he's going to miss. Okay, sure. Now, question number 26 is, if anyone else is facing issues with Zoom, let me know. Now, question number 26 is what we call as, this problem is a problem on butterfly spread. Now you'll notice the key word is spread. It's a spread. It's not a strategy, which means this can be constructed either using calls or puts, right? Dono saath mein nahi. Okay. Now, what exactly do we mean by this? And see, I'll first tell you how we create a butterfly spread, and then we'll get into the logic behind this. See, butterfly spread comprises of either 3 calls, or maybe we can just make some notes here. Butterfly spread, it comprises of 3 calls or 3 puts. Right? Now, when we say 3 calls or 3 puts, that means what we mean is we take 3 strike prices. Okay. And the 3 strike prices are evenly distributed. That means there will be a lower strike price, which we call as the minimum strike price. There will be a upper strike price, which we'll call as the maximum strike price. And there will be a strike price in the middle, which we will call the mean strike price. Now, for example, I could do transactions in call with a strike price of 100, lower side, 120, higher side, and another call with a strike price of 110, right in the middle, 100, 120, right in the middle, right? So, but it has to be evenly distributed. You can't do 100, 120, and 105. You can't do that. It has to be evenly distributed. Okay. So another example I could give you is I could do something like, let's say, 400, call with a strike price of 400, 600, 500, or 400, 500, 450. Okay. There will be 3 calls or 3 puts involved. Now, maybe I could do couple of combinations, meaning I could do a long call with a minimum strike price, long call with a maximum strike price. Now understand, I've got two long call positions, right? One long call at the minimum strike price, one long call at the maximum strike price. So I've got two long call positions. To neutralize these two long call positions, what we do is we can say one long call, and two short calls. Now remember, this 1 to 1 is just the ratio. It's the ratio. So for example, I could do 5 long calls here at the minimum side, 5 long calls here, and to neutralize these two 5 calls, 10 calls at the middle. So this is just the ratio. Then I could do one short call here, one short call here, and to neutralize these two short calls, two long calls here, right? Achha. Then I could do one long put here, one long put here, and to neutralize this, I would do two short puts. And the other combination is one short put here, one short put here, and to neutralize this, two long puts. Now, we call this minimum and maximum as the tips of the butterfly wing. Now, see, if you notice this, I mean, a rough drawing. This is my butterfly. And remember, I'm not really concerned with this portion. Sorry, I'm only concerned with this. I'm just concerned with this part of the butterfly. Right? We'll see why we do this. Now, understand, what I did was, the way I structured the position was one position here, one position here, and to neutralize this, two positions here. This is what we did, right? So we take two positions at the wing tips, one each, right? And to neutralize this, in the middle, we undertake corresponding transactions, right? Now, wait. The name of this spread arises from what you do at the wing tips. Meaning, look at the first one. What have you done at the wing tips? Long call, right? Therefore, this is called as long call butterfly spread. The next one, what have you done at the wing tips? Short call. It's called as a short call butterfly spread. Here, long put butterfly spread. And this is the short put butterfly spread. Right? What you do at the wing tips will determine the name of that spread. Okay. Now, 1 minute. Okay. Take this down, then we will solve the problem. पहले ये लिख लो, butterfly spread. अच्छा, how will you identify in the question whether it's a butterfly spread or not? Very simple. Now let's recap something. If they have given the strike price as the same, but a call and a put, strike price same, what is the strategy you create? Straddle. If the strike price is different, but it's a call and a put, strangle, right? If the strike price is different, but it's only a call, it's a spread, then remember the strike price is different. That means one will be lower, the other will be higher. So you can either do a bear call spread or a bull call spread. Similarly, strike price different, but it's only puts. It's a spread. It's a put spread. It could either be a bull put spread or a bear put spread. Okay. Similarly, when you see in the problem that there are three strike prices involved and all the three strike prices are evenly spread, then it will either be a butterfly call spread or a butterfly put spread. Okay? Whether it's a long call butterfly spread or a short call will depend upon what we do at the wingtips. Okay? Take this down, then we'll solve the problem and see how it comes out. हाँ नहीं, three calls meaning if you take the strike prices, there'll be a minimum strike price, there'll be a maximum strike price wala call, and there'll be a mean strike price. That means we are basically using three strike prices. Quantity differ kar rahe hain, right? But essentially we are using three calls. What we are changing is the quantity. हाँ. Done? Okay. Now, remember this shape. This. Just remember this shape of. Okay. Now let's look at this problem. Suppose that a certain stock is currently worth 61. This is the current market price of the stock. A trader feels that a significant price move in the next 6 months is unlikely, which means the stock is going to be range bound. Unlikely, right? Okay. The market prices of 6-month calls are as follows. Now you see they are giving information about 6-month calls. It's all calls. Strike price 55. A call with a strike price of 55, उसका premium 10 रुपया चल रहा है. 67 and 65, the call price is 5. Now, if you notice, the strike prices are all evenly distributed, right? 55, 60, 65. Create a butterfly spread for the investor and show the payoff of overall strategy, assuming that the price of the share on expiry could range between 30 to 80 in ticks of 5. Okay. Now, let's create a long call butterfly spread. Okay. Now, that means we create a long call butterfly spread. Leave some space after this sentence. We'll fill up something later. That means one long call with a strike price of 55, one long call with a strike price of 65, right? And to neutralize this, two short calls with a strike price of 60. Now, can you do something? Can you make the payoff table for these positions and prepare the net payoff? पहले आप लोग ट्राई करो, फिर मैं बनाता हूं. For these ranges, market price is 30 to 80, 30, 35, 40, 45, 50, 55, 60, 65, 70, 75, 80. And one long call, X 55, and इसका premium 10 रुपया है. One long call, X 65, इसका premium 5 रुपया है. Two short calls whose premium is 60, sorry, strike price 60 with a premium of 7 and net payoff. Long call, bullish or bearish? Bullish. See, you're not following that technique, no? Long call is bullish. That means you'll make money when the market goes up, right? And it's a long position. That means what is limited? Loss is limited. So loss is limited when the market goes down. Online. Till here, anyone got anything wrong? Let me know. That means there is some flaw in the concept. I can explain it once again. All correct, Tanish, good. Anyone else online? If you got it wrong, don't just scratch it and copy what I've written. Ask me. ये ठीक है? हाँ? Okay. Next is 5 का लॉस तो 4 का प्रॉफिट, 10 का लॉस 10 minus 7, 3 का लॉस, net payoff and how will the payoff diagram look like? This. When will you make money? When the market moves or when the market is within a range? What was the view of the trader? Market move was unlikely. That means if this particular trader constructs a long call payoff, right, he will make money if his view turns out to be correct. But if the view does not, okay. Now, is this guy an aggressive? 1 minute, sorry, I'm so sorry. Online, everyone done with this? Any doubts online? Any doubt? No? Okay. Is this guy an aggressive trader or a conservative trader? Is this guy an aggressive trader or a conservative trader? Conservative. 1 minute. Let's not get into the reason why right now. But what if he was an aggressive trader? What would he have done in this situation? With the same view, right? See, now you have to understand, your view and my view could be the same, but our risk appetites are different, right? View same hai, market upar jayega, but risk appetite is different. So what if I was an aggressive trader under this situation? Instead of doing this, what would I have done? Nidhi, which one? Long or short? Nidhi, you are right. But which one? Long or short? Yes, yes. Brilliant. Yes. Very good. 1 minute. You know what an aggressive trader would have done? He would not have allowed. See, an aggressive trader does not worry about losses. Right? That's the definition of an aggressive trader. He does not worry about the losses. Okay. Which means an aggressive trader would not have permitted this. He would have done this. But in doing this, what would have happened is this steepness would have gone up. Okay. This diagram, which I have subsequently drawn now, okay, will come out of which strategy or which this diagram will come out of which strategy? Have we done this diagram? Short what? Straddle, strangle, short straddle. Remember, short straddle is something that he would have done if he thought that the market was range bound. Because we know that long straddle is something that you adopt when you feel there is volatility in the market, but you don't know the direction. Right? So had he been an aggressive trader, he would have done that. But this guy is not aggressive. So he just did this. This is a long call butterfly spread. Now, one query would be in your minds based on this. Sir, from the question, how did you know that we create a long call butterfly spread? Because the question is very silent, no? It just creates create a butterfly spread. Strike prices? No. Strike price, so I could have just any 3 strike prices would still give you the impression of going up, no? 400, 600, 500. 400, 500, 600. Right? So any strike price would give you the impression of the market going up. So how did we know that for this investor, long call butterfly spread? Okay. Now let me ask you another question. How did you know that when the market was volatile, but the direction of volatility was unknown, you had to create a long straddle? How did you know? You understand this? My question. We have done long straddle, right? And after doing long straddle, we came to the conclusion that this is a strategy we need to adopt if the market is volatile, but the direction is unknown. Now I'm just flipping the question. Looking from the question, how will you know that you have to create a long straddle if the market has volatility, but the direction is unknown? But how did you know that you have to create a long straddle? This is quite interesting. We said in the question which we solved, we created a long straddle, right? जिसका diagram ऐसा आया था. And then looking at the diagram, we concluded that this is the diagram to be adopted when the market is volatile, but direction is unknown. Now, please try to follow me up. We created this, saw this diagram, and then came to this conclusion. Okay. Now I'm flipping the question. If question says this, and it says you have to create a straddle, How would you know which straddle to create, long or short? After solving it, you came to know, na? Right? So now, again in the same question, if you ask me, sir, how will we know that we have to create a long call butterfly spread? You know now. See, it's like this. I keep telling you, how do you know that आग में हाथ लगाने से जल जाती है? Either हाथ लगाए हो and you've got burnt, then you know, or someone else has told you that don't put it there, you will get burnt. Right? Now I'm telling you that when the trader feels that the market is going to be range bound, you have to create a long call butterfly spread. So henceforth, ये सवाल आपके दिमाग में नहीं आना चाहिए कि सर पता कैसे चलेगा, चल गया ना अभी, अब इसको याद रखो. Remember this. So from now on, when you see the question, and remember, there could only be, acha, now what if the question says that, you know, 3 strike prices are given, evenly distributed, but the view of the trader, and it's a call, and the view of the trader is that the market is going to be volatile, but we don't know which side. But he's a conservative guy. Which diagram will you create? My question again. Trader feels market is volatile, but he doesn't know which side. Okay. All the options given are call. 3 call diye hain, evenly distributed. Now, which one will you create? What spread will you create? Short call butterfly spread. That is because precisely now you know that long call butterfly spread is this diagram. See, that's what I keep telling you. Remember one diagram and one situation. And from that, you derive the other situation. Right? Now, if you created a short call spread, short call butterfly spread, how would the diagram look like? The diagram would look like this. Right? Which means you will make money whether the market goes down or whether the market goes up, you'll make money. But if the market is range bound, you'll make a loss. Okay. But what if this guy was an aggressive guy? Would he have preferred this diagram? What would he have preferred? Long straddle. Long straddle. He would want this to go up, no? But remember, if this goes up, this line would come from below. Because understand, you're getting more profits, then you'll have to bear the risk of a higher loss. Right? If this guy would have been an aggressive guy, he would have adopted a long straddle. Long straddle. Right? Acha. What if this guy was aggressive? This guy is aggressive, but he does not have he has a limited capacity to take loss. Long strangle, because he would have done this then. This. Right? So if you remember the diagram, what happens under each diagram, you can construct spreads or strategies, whether they are given in the question or not, what to create. Right? Although I've never seen institute giving questions in terms of aggressiveness. Ki wo aggressive hai, nahi hai. I mean, but if any of you do CFA later on, there you can expect these kind of questions, that he's got a limited loss appetite, but he's aggressive in outlook. There the diagrams could become useful. Okay. Now wait. Let me just redraw this. Short call butterfly spread would be this. And this you will adopt when which means if you think the market is going to be volatile, but you don't know the direction, you've got two choices before you. Either do a long straddle or you do a short call butterfly spread. Which one you would adopt will depend upon your risk appetite. Okay. Exactly. You'll make profit only here. That means from this price to this price, that's all you'll make profit. And यहाँ पे I told you, we'll just add a see. Now this is another beauty of options. Normally, when you take a singular position in stocks or futures, right? Say if you buy a stock at 60 rupees and if the stock price doesn't move at all, it remains at 60. Will you make money? If you buy a stock at 60? No. But understand, if the stock price remains at 60 only, right? But if you do this under options and the stock price stays at 60, will you make money? Options are the only instruments in the world which can allow you to make profits even when there is no movement in the market. Normally लोग बोलते हैं ना यार स्टॉक खरीदा लेकिन मार्केट ही नहीं मूव हुआ साला तो पैसा ही नहीं बना. गलत. मार्केट अगर मूव नहीं होने का, इफ यू थिंक द मार्केट इज नॉट गोइंग टू मूव, डोंट प्ले इन स्टॉक्स, प्ले इन ऑप्शंस. In options, understand now 3 situations. You can make money when the market goes up, take a long call. You can make money if the market goes down, take a long put. You can make money whether the market goes up or whether the market goes down, do a long straddle. You can make money even if the market doesn't go anywhere. Yeah. You can make money in any situation. Whereas buying stocks or selling stocks or buying futures or selling futures independently will not allow you to do this. Wahan pe you will make money only if the market moves, whether it's a long position in stock or a short position in stock. Say suppose you take a short position in stock. When will you make money? When price goes down. If the price remains at the same level at which you have shorted it, will you make money? No. Options are the only instruments which will allow you to do this. And that is the beauty of options. You can make money even when the market is flat. And of course, you can make money if there is movement in the market. Okay. Now, having done, see, till now, what is it that we have done? See, we have understood the basics of call and put, right? We have understood how to prepare payoff diagrams. And from the payoff diagram, we then graduated on to strategies and spreads. And remember, strategies and spreads are nothing but play on the payoff. वो payoff को लेके खेल रहे हैं हम. Because in all the spreads and strategy, what did you prepare? Payoff table, right? Okay. And in all the problems we have done till now, they have given the strike price of a call is so much और उसका premium इतना है. But now we come to the question, who decides the premium? ये premium कैसे determine होता है? It's definitely not something that, you can just pick it out of the air and say, hey, इसका premium 7 रुपया होगा. अरे, why 7? Why not 5? Why not 10? Right? So now we come to the step where we learn how these premiums are calculated. And this is the core of options. Because if you are going to trade on options, now understand something. When you trade on stocks, you are trading on the stock price. But when you are trading on options, you are trading on the option premium. You buy an option at a particular premium and you sell it at another premium. That means we learned, आप लोग का valuation of stock हुआ है ना? There you learned how to value a stock. And once you determine the value of the stock as per you then decided whether it was undervalued or overvalued. And then you decided to take a position, right? Similarly, when it comes to option, which are traded at a premium, right? Whether you have to buy that premium, sell that premium, or if there is a mispricing. Okay, if there is a mispricing in any instruments, what are the things we could do? Either if it's underpriced, buy it, overpriced, sell it, or if there is a mispricing, arbitrage. But the thing is, how do you ascertain whether it is whether there is a mispricing or whether it is properly priced? You have to use pricing models and determine the price as per you, right? Similarly, in Forex, to determine whether a currency was undervalued or overvalued, remember we use the interest rate parity and the purchasing power parity, right? Stocks may, you use the Gordon's growth model, Walter's model to arrive at the price and then determine. Same way, now here we are going to learn certain models to value options, determine whether they are optimally priced or not, and if not, how to do arbitrages. Right? So now, when we talk about pricing, don't write this because I think you would have already written this in that first chapter layout which we did. Pricing we'll be doing binomial models, Black-Scholes model, and within binomial, we'll be doing, just check the chapter layout. I've already written this. We'll be doing binomial riskless model, and okay, so that's why I'm saying, aap log mat likhna, I'm just writing to recap this. Binomial risk neutral model. Okay. Now, in terms of complicatedness or accuracy, okay, you can say this is the very basic model which was developed right at the beginning. Then they realized that there are certain flaws in this model. Then came this to remove certain flaws of the first model. not all the flaws. Some flaws still remained. And then came Black-Scholes, which is considered to be one of the most perfect model devised by humankind, and for which they won the Nobel Prize. Right? So this is how it advanced. So obviously binomial riskless is a very simple model. Usse thoda complicated is risk neutral, and Black-Scholes is the most complicated of them all. Okay. Now, before we get into this pricing model, we need to learn something called as put call parity theorem. Okay. Now this, ये आपको लिखना है, but wait. This is what we call as a price testing model. And not a price discovery model. But इसका स्टार मार्क कर रहा हूं, conditions apply. Meaning you can't use this model to discover the price of the option. But having discovered the price of the option through these three models, you can put that option pricing into this put call parity and test for optimality, meaning whether the price that you have found out is correct or not. Which means if the price does not satisfy the put call parity, arbitrage opportunities exist. That is, if option prices do not satisfy put call parity, arbitrage exists. Right? Now, this word parity is important because let us say, एक मिनट पहले एक काम करो, write this down, this put call parity theorem. और ये जो स्टार मार्क है, Online, done. Okay. Now, um, okay, we just follow very carefully whatever we are discussing. Low, don't let your attention wander, right? And whatever query uh, that you will have. एक minute. What is this? Oh God. Whatever query you have, keep shooting. Okay. Now see, let's understand now one more thing. Let's say there is a stock whose current market price is ₹100. Okay. And there is a call, let's say with a strike price of 100 and uska premium, let's say is ₹5, and there is a put, same with the strike price 100, iska premium 7. Now, let's say the stock price moves to 120. Now, what will be the value of this call approximately? What will be the value of this call approximately? How 115? 1 minute. There is a call with a strike price of 100, right to buy at 100. What is the market price? 120. So what will be the value of this call? What? 15. How 50? How? How will it be 15? 1 minute. कैसे? How? 1 minute. This is a right to buy at 100. Market price? So what should be the value of this call? Is this option in the money, out of the money? No. So what should be its value? Intrinsic plus time, no? So intrinsic कितना है? 20. Right? That means its value will be 20 plus something. So roughly 22. What will be the value of the put? Earlier it was 7. Right? Now the stock price has moved up. What will be the value of the put? Will it increase from 7 or will it decrease from 7? पहले भी टाइम वैल्यू ही था. Will it decrease or will it, I mean, right to buy at, right to sell at 100, market price 120. Will this option become more valuable or less valuable? तो 7 से प्राइस, उसका प्राइस क्या होगा? नीचे गिरेगा कि ऊपर जाएगा? ठीक है? Okay. Next day, this price becomes 80. Right? This was 120 price. 80. ये कॉल का वैल्यू क्या होगा? गिरेगा. कितना होगा अप्रोक्सीमेटली? इसमें देयर विल बी नो इंट्रिंसिक वैल्यू, ओनली टाइम वैल्यू. 3-4 रुपया. अच्छा, right to sell at 100, market price 80. In the money, तो इसका वैल्यू कितना होगा? Intrinsic plus time, say 23. Huh? Now you notice something here. When the stock price goes up, what happens to the call value? Does it go up or go down? And put? Down. And when the stock price comes down, what happens to the call value? And what happens to the put value? That means, can we say that the price of the call moves in the same direction of the stock, and the price of the put moves in the opposite direction of the stock? Achha. When you said that, now just recollect stocks. Market goes up, stock goes up. Is the beta of the stock positive or negative? That means, if the stock moves in the same direction of the market, you say that the beta is positive. And if it moves in the opposite direction, beta is negative. Which means, acha, the relationship between stock and market is measured by beta. The relationship between the stock and the option is measured by delta. So can we not say that delta of call is positive, right? And delta of put is negative? Now, this is something that from now on must always be at the back of the mind. That is, other stock, if the stock is going down, what will happen to the value of the call? Forget this. If the stock goes down, what will happen to the value of the call? What will happen to the value of the put? And if the stock goes up, call will? ये याद रखना पड़ेगा. That the stock ऐसा move होगा तो call ऐसा move होगा. But then remember, this is the basic delta. I can change this. I can change this delta from positive to negative, even in call. For example, if you buy a call, right? What will happen to the price of the call when the market goes up? It will go up. That means you'll make money when the market goes up, right? It's a positive delta. But what if I do a short call? When will I make money? When the market goes down, I will make money in the call. Now understand, I've changed the delta. I've changed the delta. Now, opposite directions mein karenge hum. Right? So, but basic call ka delta is positive. Basic put ka delta is negative. I can change this by undertaking a long or a short position in neither of them. For example, basic delta of put is what? Negative. How to change this as positive? Short put. Remember, short put is bullish. I've changed this into a positive delta. I'll make money when the market goes up. Right? So, basic delta yaad rakhna, but also keep at the back of the mind that I can change this delta by taking a long or a short position. Okay? So, for example, basic position of call is positive. I want to change this to negative. Short call. I'll do a short call, right? Okay. Now, which means from this, when the stock price changes from 100 to 120, do you notice something? Value of the call changes, but correspondingly the value of the put also changes. ऐसा नहीं है कि सिर्फ call change होगा, put भी change होगा. And same way, when the stock price moved from 120 to 80, call price changed, but was the put price stagnant? No, put also changed. Which means the call and put, they move in tandem. They move together. I mean, they may not be at the same level. ऐसा नहीं है कि you know ये 5 से 22 17 मूव हुआ है तो ये भी 17 नीचे डाउन मूव होगा. Not, no, no, no. They will move together in tandem. Okay. Now, which means there has to be some kind of a relationship between them. ऐसा तो हो नहीं सकता है ना कि कॉल 150 रुपया से बढ़ जाएगा और पुट सिर्फ 50 पैसे से घटेगा. It can't be that, no? For example, let's say you are all, let's say 22, 23, 24 years old, right? You run a race with a 5-year-old. Now, obviously, that 5-year-old cannot keep pace with you, right? He will be, say, 10 steps behind. But this 10 steps, everything else remaining constant, ये 10 step वही रहेगा, वो हमेशा आपके पीछे ही रहेगा, right? It cannot be that after some time you are 50 steps ahead and that guy is only 2 steps behind you. ऐसा तो हो नहीं सकता. Then there is something abnormal which is happening. Either you are slowing down or he is picking up speed. Which means this is what we call as parity, a relationship. There has to be a relationship or a parity between call and put prices. Okay. Now that is what put call parity decides to establish. कि ये relationship क्या है? Okay. Now to understand, एक minute. Do you want to write this down? ये वाला? I don't know. See, this is the current market price. Or maybe we can summarize. If stock price goes up, call value will go up and put value will come down. And if stock price goes down, call value goes down, put value goes up.
ये जो स्ट्रेटजी से वो सब कैसे मार्केट के अदर कंडीशंस के ऊपर तो नहीं बेस्ड.
मीनिंग
सभी वॉर हो गया कुछ स्ट्रेटजीज हम रियल लाइफ में तो अपना जा सकते.
हम तो करते ही ना. मैंने बोला था ना 2014 में तो हमने स्ट्रैडल्स लॉन्ग स्ट्रैडल करके पैसा बनाए ही.
अभी भी अगर अभी समझ में कि मार्केट बुलिश है तो हम strategies apply करके कर सकते हैं.
See, if your view is that the market is going to go up only, then you don't need strategy. You take a long call. You take a long call. पैसा बनते जाएगा. Strategies are adopted when you don't know which side it's going to go. But if you have a fixed view that ये तो होने ही वाला है, so then even in stocks, when would you hedge your position? When you are uncertain. If you are certain that the stock is going to go up only, then you wouldn't hedge. Right? So same way in strategies. If you think the market might behave whichever way, take these strategies. Okay. Now, with this concept, let's now get into put call parity. See, put call parity, it seeks to establish a relationship between the option prices and the stock prices. यहाँ पे हमने देखा ना, स्टॉक प्राइस मूव होता है तो कॉल का भी प्राइस मूव होता है, एंड द पुट प्राइस आल्सो मूव्स. ओके, so that means there is some relationship between the stock price, the call price, and the put price. This relationship is what we call as put call parity. Now, I will explain this put call parity in two different methods. You can choose whichever method you want, which is easy to understand, because you have to remember that what is important in put call parity is not the model itself. What is important for us is the final result. They're not going to ask you question on saying, please tell us how this put call parity is derived. No, they are going to ask you questions based on that put call parity model. Okay, but at the same time, you cannot just ratify that model. You have to know what is happening behind the scenes. Now, let's say you are looking to travel between Mumbai to Pune. Okay, there are two trains. Train A, which reaches Pune at 11 a.m. and there is train B, which also reaches Pune at 11 a.m. ठीक है, दोनों का ending time is the same. Now, if I told you that train A left Mumbai at 7 a.m. and train B also leaves at 7 a.m., will you have any preference of any particular train? No. But now if I change this, will you have a preference of a train? Which train? Which means, okay, now let's convert this into portfolio. If I told you there is today and expiry, right? If I told you a particular stock expiry value is 300, stock A, and stock B has got an expiry value of 300, that means for an investor to be indifferent between both these stocks, the stock prices must be the same today, right? That means this price must be, say, 200, this also is 200. Then you'll be indifferent. But if they are different, will you have a preference? Which one? Stock B? Okay. Now, same way, now this was, first was the train example, second was the stock example. Now let's convert this into portfolio. If I am able to prove if I'm able to prove that the value of a portfolio, two portfolios, are the same on expiry, then you will have to believe me when I say that the portfolio, both those portfolios must have the same value today for you, for prevention of any arbitrage opportunities. I'm repeating this. If I prove to you that the value of both the portfolios are the same on expiry, then you will have to accept that those value of the portfolio today must have the same values. Barabar hai? Now, the way we are going to approach is, first I'll take two portfolios, I'll create two portfolios, and I will prove it to you that those two portfolios will have the same expiry values, whatever be the situation in the market after 3 months. They'll have the same expiry value. And once I prove it to you that they have the same expiry value, that means their values today must also be the same. Nahi hoga to arbitrage ho jayega. Okay. Now, let's create two portfolios. Now, the portfolios I'm going to create is, think of these portfolios as two bags, where I buy a put and I buy a stock. Meaning, okay, now parallelly, a lot of things will happen now. If you buy a stock, what is your fear? The price will go down. Okay. Now, to protect yourself against this fear, what can you do? No, now we are not talking about futures at all. We are only talking about put options. अगर आपने एक स्टॉक खरीद लिया है 100 रुपए में एंड यू फील यार इसका भाव नीचे गया तो पुट ले लो. Why short put? Long put. Okay, now wait. Buying a stock is bullish or bearish? Bullish. Now to hedge this, you need a bearish position. So you buy a long put. Okay, fine. So I've created a thali with a put in it and a stock in it. Okay, and simultaneously, I create another bag where I buy a call and I invest in PV of X. 8 minutes. Now let's talk about something. See, normally, let's say that all of you plan to get married after 3 years and you feel that you need money, right? So you will start saving today, okay? And you go and tell your dad that, Dad, I want to invest in bonds, government bonds, okay? This is not an academic question, it's a real question. What's your dad likely to tell you? You tell him that I want to invest in government bonds. Okay. What's the first question he's going to ask you? What is the return? You say it is 5%, 6%. That is what the government bond give you today. 6%. Right? What is his response going to be? Kya hi milega 6% pe? So what is he going to tell you next? Don't invest there. Instead, invest it in somewhere else. Right? And if you were someone like me, you would say, beta, stock market mein invest kar lo. Usse zyada to mil hi jayega. Right? Now, which means, when you go to buy a stock, I can tell you the same thing also. Even when you buy a stock, meaning, I'll say, boss, you want to buy a stock? Kitna return dega ye? Let's say ITC. I'll ask, kitna return dega? You'll say, de dega 6%. What am I going to tell you? Don't buy this stock now. Invest it somewhere else, no, for the next 3 months. Gold mein laga do. Buy gold. Or invest in bank FD. You'll get 7%. Right? Or फिर खरीद लेना ITC. Right? Now, when I give you this suggestion that put your money in fixed deposit for the next 3 months, and then after 3 months, when the deposit money matures, buy ITC, yaar. आपके दिमाग में what is the fear that is going to be there? प्राइस बढ़ गया तो फिर पता चला you put in FD but the maturity proceeds is not sufficient to buy ITC, right? So what will the idea that I can give you now? नहीं, FD में तो तुम डालो ही, but now what will I tell you? Get yourself a right to buy ITC at a particular price. No, if the price goes up, exercise your call. If the price goes down, doesn't matter, you have the maturity of the deposit, kharid lena ITC, right? Which means now what is the portfolio I'm telling you to create? I'm telling you to create a portfolio of some deposits and call, right? Now you have to understand one more thing. Why PV of X? Now X we know is the strike price. Okay. How much? See, when you buy a call, let's say you buy the call of ITC at 480 rupees. 480 rupees strike price. If the price of ITC up at the end of 3 months goes to 600, what will you do? Exercise the call, which means you will get the share at what price? 480. If the price of ITC doesn't go to 600, it goes to 300. What will you do? And buy it from the market at 300. Which means what is the maximum outflow that can happen for you to buy ITC? No. Maximum outflow that you can incur to buy ITC shares. Strike price. Strike price. Because if the price goes to 600, you will exercise it at 480. Right? If it goes below 480, you'll buy it from the market, which means the maximum outflow that can happen to you for buying ITC is the strike price. Which means how much do you need to invest today? Knowing that the maximum outflow that will happen is only 480, how much would you need to invest today? 480. Less than 480, present value of 480, right? Now 480 is what? Strike price. How much do you need to invest? PV of strike price, right? So what did I tell you to create? Invest PV of strike price and buy the call, right? Now, there is another way to look at this whole thing. Let's say, okay, online people, visualize the classroom. There are 2 rows of benches here. Row A, row B, okay? I'm the financial advisor to both the rows, okay? Now, row A wants to buy the stock. Stock kharidna hai. And I'm the financial advisor and I tell them, Bewkoof, don't buy the stock now. Invest it somewhere else. You can make more money and then buy the stock. So what will row A do? Buy a call and invest in present value of X. That's row A. Okay. Now understand, when will you make money? If the maturity proceeds of deposits turn out to be much higher than the strike price. Think of it. 480 is the strike price, right? You invested, let's say 400 rupees in fixed deposit. At the end of 3 months, let us presume that you get back 500 from the deposit you invested. What is the maximum outflow that you'll incur to buy the stock? 480. That means you made a stock bhi ghar pe aa gaya aur 20 rupees extra bhi mil gaya aapko, right? So I gave this advice to these people. Then what I do is I go to row B and I tell them, look, this row A people, na, they will come to buy the stock. Because I know na, इनको stock खरीदना है. तो एक काम करो, वो stock तुम खरीद के रख लो आज. तुम खरीद के रख लो. Now, remember, row B people were not interested in doing anything. They were just sitting happily at home. But now I come and tell them, row A people will come and buy the stock. You buy the stock. Now, row B people will have a fear. Sir, आपके बोलने पे we purchase the stock. But what if these people don't come? And when will these people not come to you? When the prices have gone down, right? They will not come. But now what am I telling row B? You buy the stock, these people will come. But the row B people will ask me, sir, what if the prices fall down and they don't come? हमको तो कुछ करना ही नहीं था, आप जबरदस्ती हमको बोल रहे हो खरीदने और भाव गिर गया तो व्हाट विल आई टेल देम? व्हाट इज योर फियर? स्टॉक गिर जाएगा और वो नहीं आएंगे ना. Get yourself a right to sell the stock na. If they don't come, you exercise the put. If they come, give it to them. Right? I mean, ये normal life पे भी अपन करते हैं. Let us presume that you hear a rumor that आपका जो housing complex को Hiranandani is going to redevelop it. You are staying in a flat, right? That's okay. आपका फ्लैट तो है आपके पास, but now you hear a rumor that Hiranandani is going to redevelop and he is going to give, for every one room, he is going to give another additional room. Now think, you have a house, that is okay. But as a trader, what will you try to do? Buy one more house. उसका भी तो 2 रूम मिलेगा, है ना? आप एक घर खरीद के रख लो, लेकिन डर क्या लगा रहेगा? ये तो रूमर है यार. If Hiranandani doesn't come, flat तो मेरे पास आ गया, right? So what will you do to protect yourself? You purchase the flat, but डर ये है कि फ्लैट का भाव नीचे जाएगा. What will you do to protect yourself? Buy a right to sell the flat, right? So that means, what is the portfolio you have created? Purchase a stock and buy yourself a right to sell the stock, right? Now, I am the financial advisor to both of you. और मैंने आपको क्या गोली दिया? Don't buy the stock now, later. Invest the money somewhere. और इनको क्या बोला? Buy the stock now. Right? Now, if I'm the financial advisor to both of you, and if I'm truly neutral, then both of my strategies should not allow one row to make excess money over the other. Right? Because if by following my advice, this row makes more money than what these people did, तो ये लोग क्या बोलेंगे? सर, तो फिर हम ये रो पे क्यों बैठे? हम भी तो उसी में जाएंगे. That means the payoff of the strategy adopted by this row and the payoff of the strategy adopted by this row must be the same, right? इस साइड को मैंने क्या बोला था? Don't buy the stock now. Invest it somewhere and buy a call. Call plus PV of X. और इस रो को मैंने क्या बोला? Buy the stock. Get yourself a right to sell the stock. Now understand, both the payoff must be same, which means, can we say that this must be equal to this? And let me prove it to you also, right? And remember, what is it that I'm going to prove? I'm going to prove that on expiry, both these portfolios will have the same value. Okay? Let us see how. Let's take some data. Let's say there is a stock with market price of, let's say, 100. Okay? Let's say there is a call. Strike price lete hain 120, right? That means we are talking about a call with a strike price 120 and put with a strike price 120. Okay? Let's presume time equals to 3 months. And let's presume R equals to 10% per annum. Acha. Now, please remember this. Whatever discussion I'm about to do now, I'm talking about on the day of expiry. अच्छा, how much will you invest today, by the way? PV of X मतलब कितना invest करोगे? What is X? 120. उसका present value at 10% per annum for 3 months. So what will be the present value? तीन महीने के बाद अगर 120 रुपया चाहिए आपको, कितना करोगे? Point 1 divided by 4 plus 1 divided by into 120, 117.07. You will invest 117.07 today. Okay, but I'm talking on expiry. Let's say, acha, now we know that on expiry the stock price could be anything. So let us say market price of stock is 500. And notice this. Let's find the value of this thali, this bag. Understand? Here, what do you have in this bag? You have purchased the stock and you've also got a right to sell the stock. At what price? Right to sell at 120. Okay. Now, on expiry, what will be the value of this thali? What will be the value of put? Right to sell at 120 on expiry. Market price is 500. What will be the value of the put? So what will be its value? On expiry, what will be the value of this put? 0. Out of the money, no intrinsic and no time. 0. What will be the value of the stock which you have in your bag? Huh? What will be the value of the stock which you have in your thali?
500.
500. Okay? Now let's go to the other thali. What do you have there? Let's go to the other bag. What do you have there? 1 minute. Why are you jumping? Go in sequence? First, what do you have there? Call with a strike price of 120. And the market price of the stock is? What will be the value of the call on expiry? Intrinsic value? How much? 380. And the amount of money that you deposited will now mature. And how you will get how much? 120, no? Right? So what is the value of this thali? And what was the value of the other thali? 500. Okay. Now, let's presume that on expiry market price is 30. Let's value this thali first. What do you have there? First one. Sequence. What do you have the first one there? Right to sell at 120. Market price is 30. What will be the value of that put which you have in your bag? 90. What is the other thing you have in that thali? What will be its value? Which means the total value of this bag. 120. Okay, now let's move to other bag. What is it that you have? Call. Right to buy at 120. Market price 30. 0. And you invested PV of X, no? You see that? Whether the market goes up or down, both these portfolios will have the same value. But the same value is when? On expiry. So what have I proved to you? I have proved to you that these two portfolios will have the same value on expiry. Which means now you will have to accept my saying that these portfolio, therefore, P plus S must be equal to call plus PV of X today also. You remember that? What I told you? दो पोर्टफोलियो उसका एक्सपायरी वैल्यू अगर सेम है तो उनका आज का वैल्यू सेम होना चाहिए. Right? Now this is what we call as put call parity. P plus S must be equal to call plus PV of X. And everyone listen carefully. I will not allow you any flexibility to rearrange this formula, meaning you will not write this has to be in this format only, and we'll see why. Later on, we'll see why. It has to be in this format and it has to be in this sequence. You cannot also write. No, it has to be this. I'll show you why. Okay, this is what we call as the put call parity model. P plus S must be equal to call plus PV of X. Okay, and if the pricing don't satisfy this model, that is, if P plus S not equal to arbitrage exists. Achha. Now in this, P is the put value. Put value, you will get it from the screen. S is the stock value, which you will get it from the screen. Call value, you will get it from the screen. Strike price is anyway a standard strike price, which you will select. Right? Time, you know the option expiry date. Right? So what is the only thing which is discretionary out here? Rate. Again, it all boils down to R. Because everything else, suppose I told you, let's say I gave you a stock. Let's say I tell you SBI, right? And I give you an assignment. Can you tell me whether, let's do something, no? Let's say, you look at this. Now, suppose I give you all the assignment independently. सबको independently solve करने बोलता हूँ. कि for an option on SBI, let us see whether put call parity holds. That's the assignment, right? तो आपको क्या-क्या data चाहिए to see whether put call parity is holding? P plus S must be equal to call plus PV of X. Okay. Now, first of all, can you just write down this data in somewhere in rough? Just write the put call parity first. P plus S must be equal to call plus PV of X in rough. Just note down this expression. Right? Acha. Now, let's try to put in some data to see whether we can see whether put call parity holds. P plus S, right? Under S, write this 585.6. That's your spot price. Okay. Now, let's go to एक minute. Let me just equity. Let me see whether I can just see P plus S is equals to call plus PV of X. Okay. Now under stock 585.6. Now let's go to derivatives and let's go to option chain, right? And 585 के आसपास देखते हैं. Let's see for strike price of 580. Can you see the one second? 580 strike price. Okay. What is the value of the put? 580 put 5.85. Right. Achha, what is the value of the call? 580 call 14.25. and we need to calculate PV of X. X we have taken is 580. That is 580. Now, can you tell me whether this equals this or not? I mean, PV of X चाहिए ना आपको? PV of X बताओ कितना होगा? Now understand, each one of you will give me a different answer depending on what R you take. Right? So whether the put call parity holds, then you will realize that ये पूरा खेल जो है, this whole game is about R. Right? That is one thing which I want to prove you, that even in option pricing, in stock valuation, D upon K, R, bond valuation, cash flow का discounting model, R, forex, interest rate parity, purchasing power parity, R, right? Here also we finally see that it all boils, because इसमें number of days जो है वो तो सबके लिए fixed ही रहेगा ना, 26 October, वो तो सब लोग एक ही दिन आज क्या करेगा? What is today's date? 13. So 26 would be 12 days, right? So वो तो 13 days, वो तो सबके लिए same रहेगा, right? Divided by 365, वो भी सबके लिए same रहेगा. The only place where you are going to differ is R, and the person who establishes this R correctly is the person who ends up making money. So finally, it's all about R. Okay. Now, wait. I want you to. Achha, this you can take down, this one, this portion. But please remember, all this is not important. What is important is you remembering this. They are never going to ask you how you derived this or why. This is portfolio A and portfolio B. Sorry. Chalo, likh lo, then I'll make you write something else. This is Okay, यहाँ पे let's write down something. Let's see how this works and how we do arbitrage. First, we'll do few academic problems, then we'll go into the real market and see whether arbitrage opportunities exist or not. Okay. Let's look at question. एक minute, I'm so sorry. Online, everyone done writing this or should I wait? Online, everyone done writing this? Done? Anyone still writing? Let me know. Okay. Take it. Sure. Now, let's look at question 28. We'll do 27 later. 28 पहले करते हैं. You are given the following information about ABC Limited's share price and call option. Current share price 90, option strike price 110. So remember, current share price is nothing but S. Option strike price is X. Risk-free interest rate R. Time to option expiry 1 year T. Call premium, this is call 12 rupees and put premium 30. Now we have to find out whether there is an arbitrage opportunity or not. Right? Now, which means we will push this data into the put call parity model, right? And see whether both the sides are equal. So let's say this. See, as per put call parity theorem, P plus S, call plus PV of X. Okay, P plus S must be equal to this. Now, just push the data. P is 30 plus stock price is 90, call 12, and PV of X will be how much? 110 into 1 upon 1.10, 10% for 1 full year. So 120, और ये कितना आता है? This is not equal. अच्छा. Suppose value of a mobile phone in Chennai is 60,000. Ideally speaking, Mumbai also it should be 60,000. But let's say the price in Mumbai is different. It's 70. What will you do? Okay. Buy from Chennai, sell it at Mumbai. And suppose the mobile phone price in Mumbai was 30,000.
Then buy from Mumbai.
Okay. So basically the whole idea is when two things are supposed to be equal, but they are not, you are going to buy the cheaper side and sell the expensive side. Now, in this case, understand you're dealing with two portfolios. P plus S is one portfolio and C plus PV of X is another portfolio. They are supposed to be equal, but they are not. So which portfolio are you going to buy and which portfolio are you going to sell? You're going to buy one portfolio and sell the other portfolio. Okay? P and C, do we mean their premiums or their inflow as on expiry? No, 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 no. P and call is the value of the call and put today. Because understand, put call parity model, P plus S is equals to call plus PV of X. When? P plus S must be equal to call plus PV of X. No, that's what put call parity tells you. When? Today. No, today. Understand? मेरा उधर prove मैंने क्या किया कि ये करने से our expiry values are going to be the same, which means their value today must be the same. So put call parity tells you that at any given point of time, P plus S must be equal to call plus PV of X. Therefore, this P and S, they are the value of these options. Right? Value means the premium. Okay. Now, आप लोग कुछ मत लिखिएगा. Keep carefully following what I'm doing. Try to understand what we are doing. Don't focus on writing anything right now. See, I'm going to buy this and I'm going to sell this, right? So that means don't write online, don't write anything, just follow me very carefully. Arbitrage profits can be made as under. Okay? Now, day 1. What are the things you're going to do? Buy? 1 minute. You will proceed. Now, this is what I'm saying. You will proceed from left to right, no deviations. Remember, I told you, you will not write C plus PV of X equal to. So you will not start from there also. Left to right. So what will you do? Sell. Sell. Okay. Now, let's prepare 2 columns. Inflows, outflows. So the first thing you're going to do is sell put, right? With a strike price of 110, right? Now, when you sell a put, is it going to result in an inflow or an outflow? Inflow. When you sell the put, you'll receive the premium, right? The premium of put is 30. Barabar? Next, what will you do? Huh? One minute. You are going to sell this portfolio, right? Buy stock. Sell the stock. You're going to sell the stock. Boss, you're going to sell this portfolio. Right? So you will which means stock goes out and what will come in? How much? Money will come in. How much? 90. That's the stock price. Achha. Next, what will you do? Buy call. When with a strike price of, and this will result in an inflow or an outflow of 12. Okay. Next, what will you do? This will result in what? Inflow or outflow? How much? That means on day one, your bank account will witness an inflow of 120 and the same bank account will witness an outflow of, which means on day one, you will be left with now this is your arbitrage profit and ये पैसा आपको day one को ही मिल गया. This you can just spend it on your vacation. Come what may, no one can take this money back away from you. This is yours now. Whatever happens to the market. Now let us see how. On day 365. Now, we don't know on day 365, the stock price could have gone to anything, right? So let us take two situations where the stock price has gone to, let's say, 1,000, right? Let's say market price of stock goes to 1,000. Now understand, all the transactions which you have done on day one has to be reversed. They have to be settled, no? Right? Now, you have sold a put, right? With a strike price of 110. Market price is 1,000. What will be the value? Will this put be exercised by the buyer? So what will be the value of this put? Huh? Remember, now we are talking about day 365, right? You have sold a put. You have given someone the right to sell the stock to you at 110. Right? Will that guy exercise it? No. That means this put will lapse. No cash inflow outflow. Sure. E put sold lapse. Achha. Now you sold a stock. You have to buy it back. Right? So at how much will you buy it back? 1,000. So that will be an outflow of 1,000. And this stock which went out will now come back in. Achha. You had purchased a call with a strike price of 110. Okay. What will happen to it? Exercise. So exercise means what will happen? Wait. Now we take a slight detour from here. Because now we need to know that we need to understand how options are settled in the market. We'll come back to this. Now understand something, which is why I told you don't write anything. Let's say there is a stock whose current market price, and let's say we are talking on 1st Jan. Current market price is rupees 100. There is a call with a strike price of 120. Okay. Is this option in the money, out of the money right now? Out of the money. That means uska premium is, let's say, 4 rupees. Okay. Now think of this. You purchase this call. At rupees 4. Okay. Now let's move to the expiry date, 31st March. Let's say it was a 3-month option. Okay. Now on 31st March, what if the stock price is 40? What will be the value of this call on the last date, on the expiry? 0. Right? That means the asset, remember, an option is an asset that you purchase, right? Any option, chahe wo call ho, put ho, it's an asset, right? And the asset which you purchased at 4 now is trading at 0 value, right? Will you exercise the option? Are you going to exercise it? No. Faad ke fek doge, which means what is your loss? But will there be any cash inflow outflow on the last day? No, na, because ये जो 4 रुपया देके आपने कॉल खरीदा था वो तो day 1 को खरीद लिया. You paid it on day 1 also. That means if the option is expiring out of the money or ATM and its value is 0 on the last day, then there is going to be no cash inflow or outflow on the last day because it's lapsing. But now, what if the current market price of the stock on expiry is 500? Right? It's in the money. What will be the value of this option on the last day? 380. Right? Okay. That means on the last day, it will be trading at 380. So what will you tell the broker? I'm exercising it. Give me the stock. But what will the broker tell you? Stock वॉक कुछ नहीं. हम क्या करेंगे? Square off करेंगे. Right? Now remember, you had purchased the call at 4 rupees. Now it will be squared off because you are exercising it. Square off will happen at what price? You had purchased at rupees 4. Now it will be sold at what is it? No. What is the price at which this option will be trading on the last day? 380, no? See, if you purchase Tata shares, right, and you are going to square off on the last day, the square off will happen at the price at which Tata shares are trading on the screen. So when you purchase this call option at 4 rupees, the square off will happen at the price at which this call is trading on the last day, right? It's trading at 380. Okay. How much is the profit you made? So how much check will you receive from the broker? Galat, 380. हाँ, 4 रुपया तो आपने पे कर दिया था, तो अभी तो 380 मिलेगा. Now this is different from futures. See, futures, when you buy at say 100 and you square it off at 300, how much is the profit? Futures, you buy at 100, square it off at 400. How much is the check you will receive from the broker? 300. Why? Because when you purchase futures, remember, you did not have to pay anything. It was just a contract. But now options, on day 1, you are paying 4 rupees, no? So if the question asks you, what is the profit or loss in this option? 376. But we are talking about, in this case, we are talking about what? Inflow outflows, right? Which means, see this. Acha, okay. Now, can we summarize based on this that if the option on expiry is OTM or ATM, it will just lapse and there will be no inflow outflow taking place. But if the option is expiring in the money, it will be exercised. If it is exercised, that means it will be squared off, right? And it will result in a inflow or an outflow, right? Okay. Call purchased, exercised, that is squared off, that is now sold. रिमेंबर आपने परचेज किया ओरिजिनली, अब वो स्क्वायर ऑफ मतलब उसको सेल करना पड़ेगा. सोल्ड एट रुपीस, कितने में ट्रेड हो रहा होगा ये? रिमेंबर दिस वाज अ राइट टू बाय एट 110 and the stock price is 1000 at rupees 890, resulting in inflow of 890. अच्छा, एक मिनट, ये आपने डील कर लिया, ये डील कर लिया, ये डील कर लिया. अभी आपके पास इन्वेस्टमेंट इन पीवी ऑफ एक्स क्या है, उसका क्या होगा? इनफ्लो आएगा ना. एच इन्वेस्टमेंट मैच्योर्स एंड वी रिसीव कितना? 110. दैट मीन्स ऑन एक्सपायरी आपका बैंक अकाउंट में इनफ्लो कितना आएगा और आउटफ्लो? तो दैट मीन्स आपका बैंक अकाउंट में जो 8 रुपया बचा था वो तो अभी भी इंटैक्ट है, राइट? दैट मीन्स दिस इज 1000, नथिंग. ओके, नाउ आप बोलोगे सर ये तो मार्केट प्राइस ऊपर गया बोल के आप ये कर रहे हो. मार्केट प्राइस अगर नीचे चले गया होता तो हैड इट गॉन डाउन? लेट्स सी दैट आल्सो. नो, लेट्स से 20 rupees, right? Let's start from the beginning. You have sold a put at 110. Market price 20. Is it in the money or out of the money? Will it be exercised?
Yes.
By whom? Exercised by the buyer. तो इसका मतलब आपका तो लॉस होगा, right? Which means since it will be exercised, that means it will be squared off, right? Squared off meaning what transaction will you enter today? Buy or sell?
Buy.
Today you will buy, no, because you have sold that put and that put is being exercised, which means the square off will happen by entering into a buy transaction. Okay, wait. Put sold, this is E again. Put sold, exercised, that is squared off, that is now purchased. At what price? ये put last day पे what price will it be trading on the screen at? 90 intrinsic value, resulting in outflow of 90. Okay, then this is done. You've sold the stock, you've got to purchase it back. Buy stock at what will happen? Stock comes in. This is done. Buy call. You purchased a call at 110. Will it be exercised or lapse?
Yeah.
Now here you need to remember the screen which I showed you. Remember the shaded and the non-shaded? If the put is shaded, then if the call is shaded, then for the same strike price, the put is unshaded. Remember? Both cannot be in the money at the same time. Or यहाँ पे you have already decided that the put is exercised, which has to lapse, right? So G, call purchased. Lapses. Nothing happens. This is done. Invest in PV of X. What will happen? Investment matures. And you will receive 110. Which means on the last day, your bank account will witness an inflow of 110. Which means this 8 rupees is still intact. Right? And if you see, what were the three conditions for arbitrage? Profit should be locked on day one. Ho gaya. 8 rupiah is my profit and that is not going to change. Whatever happens to the market. Then
Opposite transaction.
two opposite transactions to be taken. So we purchased one portfolio, sold another portfolio. Third,
Back to original.
you must be back to the original position. Remember, we squared off everything. And if you see this, यहाँ पे stock बाहर गया, ये अंदर आ गया. इधर बाहर गया, इधर भी stock अंदर आ गया. That means I'm back to square one, but my bank balance has increased. See, all those three conditions are still being maintained. Right? This is how, Acha, now in this thing, you'll say, sir, how do we do it in the real market? Very simple. अभी हमने कुछ डेटा लिया था ना बीआई का. आपके पास मार्केट का स्टॉक प्राइस है. You've got the put price, you've got the call price, you've got the number of days. You decide no कि आपको बैंक से कितना आर मिलता है या रिस्क फ्री कितना आर मिलता है आपको 6% and see whether this P is equals to holds to C plus PV of X. If it doesn't, do these transactions. Sell the put, buy the call, sell the stock and invest in PV of X. Right? Okay. Take this down. Keep thinking. सोचते रहो. Any doubt, keep asking. We in the formula, we will be doing more sums on this, so don't worry about it. But ये तो मैंने per stock लिया है, right? तुम करो. Stock options are traded in lots, right? So let's say SBI का lot is 750 shares, right? So you buy one put, one call, sell 750 shares, right? And invest that money. हाँ, मेरा 8 रुपया प्रॉफिट पर शेयर है ना. आई एम डूइंग इट इन वॉट एवर क्वांटिटी आई वॉन्ट इनटू दैट. निफ्टी के ऑप्शंस में नहीं, बिकॉज निफ्टी में स्टॉक नहीं है ना. यू डोंट हैव अ स्टॉक. You can't do anything in the spot market. Remember, that's what I taught you. Nifty में you can't do anything. जो भी है futures and options. Now your next question should be, so then can we do it in Nifty options and futures? Nifty options, then we'll see that. We'll do that also. Even we can do it even. See, I've taught you the arbitrage between stock and stock futures. Now I'll tell you the arbitrage between stock and stock options. And then we'll see, can we do it between options and futures then? Stock, futures, options, right? Stock and futures, just say arbitrage. Stock and options arbitrage. That means there must be an arbitrage between option and futures also, no? A equals to B equals to C. Then there must be an arbitrage between all the three combinations. We'll do that also.
सिर्फ ऑप्शंस में
हाँ, सिर्फ ऑप्शंस में आर्बिट्राज. स्ट्रैडल स्ट्रैंगल ही होगा. स्ट्रैटेजीज है वो तो. See, arbitrage you have to do between two different segments. Yeah, that's the value of the put and call.
खरीदना है कॉल उसका भी पे करना पड़ता है टू लॉट्स
into lot, that's it.
और जो फुल बाय करना है
Same,
और सेल करना रहेगा तब
same.
उसका वो मार्जिन मेंशन करता है
Margin अलग है. You're talking about at what price should we buy or sell it. Right? अभी जैसा मैंने लिखा है, right? 14 rupees was the call price. So I want to buy 1,000 calls. I'll pay 14,000 rupees. I want to sell, say 100 calls, 1,000 calls. I will sell it. I will receive 14,000 rupees, but I'll have to pay the margin. But I'll receive 14,000. Right? और पुट का हमने कुछ भाव देखा था 5 rupees 80 पैसा something. I want to buy the put 1,000 puts. I'll pay 5,085. I mean 5,850. If I want to sell, I will receive that 5,850, but I'll have to put up margin. But margin you have to remember is like security deposits. वो तो मेरे को वापस मिल जाएगा. As वापस कब मिलेगा? If there is any loss, right? हम लॉस का चेक ब्रोकर को अलग से देंगे और बोलेंगे भैया डिपॉजिट तो वापस कर. लेकिन ब्रोकर क्या बोलेगा? सर यहां से दोगे उसको लोगे तो रियल लाइफ में वैसा होता है. बट देन वी हैव टू रियलाइज दैट मार्जिन इज नॉट अ कॉस्ट. इंटरेस्ट ऑन मार्जिन इज अ कॉस्ट अगेन.
फ्यूचर में जो प्रीमियम ब्रेक
फ्यूचर में प्रीमियम नहीं होता है.
नहीं
फ्यूचर का प्राइस होता है. हाँ बोलो. बट क्वेरी
नहीं मैं बोल रहा था फॉरेक्स में जो रहता है ना तो मैं फॉरेक्स में फ्यूचर में एंटर करता हूँ
हाँ
हेजिंग के लिए मुझे 2% प्रीमियम पे करना पड़ेगा फिर वो तो मेरा कॉस्टली हो गया.
हाँ तो
अपफ्रंट प्रीमियम पे करना पड़ेगा.
see when you're paying a premium, say 80 rupees is the spot and 81.60 is the, so essentially banker तुमको क्या बोल रहा है? 2% प्रीमियम दे देना मेरे को. Essentially you are entering into a contract at for 81.6. No, they are not expressing it in price, they are expressing it in percentages. Acha, in the exam, if the question tells you that prove the arbitrage for market price on expiry of say 600 and 700, तो आपको ये दिखाना पड़ेगा. Okay. If they don't tell you anything, they just say arbitrage, then it's a judgment call. कितने marks का question है? If it's a 4-mark question, then you just say arbitrage profit of 8 rupees is to be made by selling put, selling stock, buying call and investing in PV of X. बस उतना ही. ये नीचे, I mean आपको ये you don't even have to show this. मैं लिख के बस ये भी नहीं दिखाना है क्योंकि ये 8 रुपया तो आपको इधर से ही पता चल गया ना, राइट? तो और इधर सेल बाय तो आपको डिसाइड कर ही लोगे. तो यू विल, अगर इफ इट्स अ 4-mark क्वेश्चन, यू जस्ट हैव टू राइट आर्बिट्राज प्रॉफिट ऑफ ₹8 कैन बी मेड बाय सेलिंग पुट, सेलिंग स्टॉक, बाइंग कॉल एंड इन्वेस्टिंग इन पीवी ऑफ. बस दैट्स इट. लेकिन अगर यही 6 या 8 मार्क का क्वेश्चन है एंड दे हैव नॉट गिवन यू एनी प्राइस ऑन एक्सपायरी, देन यू आर्बिट्ररली टेक वन हाई प्राइस, वन लो प्राइस लाइक आई हैव डन हियर एंड यू हैव टू शो दिस. कुछ मतलब रैंडम ले लो ना. आई मीन एक ऊंचा भाव ले लो, जितना ऊंचा ले सकते. आई मीन जितने भी चाहिए. लाइक मैंने तो यहाँ पे व्हाट इज द स्टॉक प्राइस 90, ये देखो मैंने 1000 रुपीज लिया है. मन में दिमाग में 1000 आया तो मैंने 1000 ले लिया. 5000 ले लो, कुछ भी ले, 150 ले लो. बट दो प्राइस हाई एंड लो, लाइक यू सेड, स्ट्राइक प्राइस के ऊपर, स्ट्राइक प्राइस के नीचे. And इसमें I'll give you sums to practice today at home. क्योंकि book में there are only 2 questions. हाँ कौन सा? Resulting in the inflow of. घूमता रहता है, but see, there is something called as last time also I told you, when you look at these online apps, they all give you something called as a bracket order, right? जहाँ पे तुम पूरा parameters fit कर दो, cut, execute, everything gets executed in a fraction of a second, तो लॉक हो जाता है.
तो वही टाइम पे होगा.
हाँ
9:15 का चाहिए, 9:15 पे ही जाएगा.
हाँ
Time to check.
कैलकुलेशन, हाँ कैलकुलेशन करके बैठना पड़ेगा. See, that is what trading is, not a pastime. It's a full time. After the market closes, no, right? All of you might be under the impression that सही नौकरी है यार, 3:30 बजे मार्केट बंद हो जाता है, उसके बाद तो ऐश नहीं है. उसके बाद अगले दिन का स्ट्रैटेजी you have to devise and you have to keep it ready. So it's a full-time occupation, which is why people who treat this as a pastime invariably incur losses, because market में ऐसे लोग बैठे हैं जो 24/7 यही करते रहते हैं. उनका 24 घंटा यही काम है. I mean, it's the same thing, no? You go to gym and keep wondering कि तो आपका बॉडी ऋतिक रोशन जैसा क्यों नहीं बन रहा है. वो 24 घंटा जिम में पड़ा रहता है. आप जाओगे महीने में एक बार, वो भी मंथली रेजोल्यूशन करके, एंड देन यू वंडर कि उसका जैसा क्यों नहीं आ रहा है. वो 24 घंटा वही कर रहा है. हो गया, डन. अच्छा, what is the value of, what will be the value of the futures on the expiry date? Futures, spot price. And what will be the value of options on expiry date? If If it is in the money, then intrinsic value. If it is ATM, OTM, then the value is 0. Okay. Now, why I'm repeating this time and again is because students most of the time make the mistake that even in options, they say last day is equal to spot. No, last day it's only the intrinsic value. Okay. Now, let's look at the 27th problem. And this we will do it together. And we will test it for arbitrage for market price on expiry of 370 or 15. ये लिख लो. We'll test it for market price on expiry of either 370 or 15 rupees. Right, so we do it together. First, we will put this into put call parity. Okay, so as per put call parity theorem, P plus S is equals to call plus PV of X. Right? Now P is 21, stock price 90, call 20, and PV of X will be 111, and this will be 1. तो आर्बिट्राज प्रॉफिट कितने का बनेगा? 9 rupees. 1 minute. By doing what? Buy. So you're going to buy this portfolio and you're going to sell this portfolio. That means you're going to buy put, buy stock and sell this side. Okay, we'll come to that. 1 minute. Arbitrage profit of rupees 9 can be made as under inflow, outflow, day 1. A, buy put with a strike price of 110. Inflow होगा, outflow होगा. Outflow of 21. Fair? When you buy stock, yeah. Fair? Inflow of and fair? Okay, wait. Borrow PV of X. Okay, ये तो, but understand. Now, see, in the first case, everyone listen carefully. In this problem, if you notice, now this has multiple angles to it. What did we do to the stock? Sell stock. Now, once you sold the stock, you will receive money. What are you going to do with that money? In this case, what are you doing to the stock? Where are you going to get the money from? Borrow. Which means whether you're going to invest or borrow depends on what you do to the stock. Right? Now, here comes the rationale behind my telling you that sequence, don't disturb it. Because unless and until you write here what you're going to do to the stock, you don't know what you're going to do with the money. So suppose आपने formula को अपने हिसाब से twist कर लिया and you started writing first by PV of X. Now you're thinking what to do, borrow or invest? Then you get into the rattoing mode. If this is sell, then this is invest or whatever. I say don't get into the rattoing mode. Follow it in sequence. See what you're going to the stock. If you're selling the stock, ask yourself the question. I sell the stock, I get the money. What the hell do I do with the money? Invest it somewhere. If you're going to buy the stock, ask yourself the question, where am I going to get the money from? Borrow. Right? So here you're buying the stock. No? So therefore, borrow PV of X. So when you borrow PV of X, remember 100 is going to be your inflow. That means on day one, your bank account is going to witness an inflow of 120 and an outflow of, leaving you with an arbitrage gain. ₹9. Now we have to prove that this remains the same, whatever happens to the market. So on day 365, if the market price of share, मैंने कितना बोला था? 370. Now understand, we have to reverse all of the above. So, नहीं, sell put नहीं, you'll have to analyze कि ये exercise होने वाला है कि नहीं. Exercise होगा तो sell होगा ना, वरना तो ये lapse हो जाएगा. So you buy a put, that means you have got a right to sell at 110, market price 370. Great. So put purchased. Lapse. That means no inflow, no outflow. Acha, you purchase the stock. Now you need to sell the stock. You sell the stock, stock goes out, 370 comes in. Acha, now you know it's very easy. Put is lapse. It means call is going to be exercised. And if it is going to be exercised, it is going to be squared off. Now, what did you originally do to the call? Sold. Now it's squared off, matlab now it will be purchased. Right? So, call sold, exercised, that is squared off, that is now purchased, resulting in purchase हो रहा है ना, तो outflow. क्या भाव पे, what price will it be purchased? Intrinsic value, right? Intrinsic value is 370, strike price is 110, 260. 260, that will be an outflow. And then repay, borrowing. How much? 110, no? With the interest. देखा? 370 आपका ₹9 रह गया. Arbitrage profit. And same way, prove it for market price equals to 15. बताओ क्या होगा? हाँ, पुट एक्सरसाइज होगा, कॉल लैप्स हो जाएगा. So E put purchased exercised, that is squared off, that is now sold, resulting in inflow of kitna? Intrinsic value 95. Stock to up, you have to sell the stock. Sell stock at 15. Call sold. Lapse. And repay borrowing. $110. इसमें आपका एक सवाल ये भी उठ सकता है, सर, will we not earn this profit on 9 rupees? Because this 9 rupees is on day one only. Yes, but that is over and above your arbitrage profit. मेरा arbitrage profit तो 9 ही है ना. ये तो incremental income हो गया. Whether you invest or you decide to spend, that is your lookout. As far as arbitrage is concerned, 9 rupee profit is confirmed. Okay, now
टैक्स के implications नहीं दिया.
मेरे वो मैं क्यों देखूं? वो जो टैक्स कंसल्टेंट है जिसको पैसा मिल रहा है वो देखेगा. मेरा काम पैसा कमा के देना है. अभी देखो 9 रुपया तो पैसा बन रहा है. अब इस पे टैक्स कुछ भी हो मेरे को क्या फर्क पड़ता है यार, इसी में से जाएगा ना टैक्स. मेरे को 2 रुपया भी आर्बिट्राज प्रॉफिट होगा तो मैं कमा लूंगा, क्योंकि टैक्स 2 रुपये पे देने वाले हो ना, फिर भी बचेगा ही ना. फॉरगेट 2 रुपया. मैंने क्या नहीं देखा इसमें मालूम है? वन थिंग विच आई हैव नॉट कंसिडर्ड, विच आई शुड हैव कंसिडर्ड, इज नॉट टैक्स. व्हाट? नो, not lot size. Transaction costs. Understand, on day one, what are the transactions? You know how you're going to pay brokerages on this transaction, this. And then when these are reversed, the sell stock, ये तो lapse हो गया, इसमें तो कुछ नहीं होगा. इसमें brokerage लगेगा. इसमें नहीं. मेरा brokerage लगता है. That I should consider, but that I won't consider here because brokerage structure for each one is different. Like when I do big lots, see, I was employed with a broker, right? So when I was with the broker, my account was treated as an employee account, and generally brokers don't charge brokerages on employee accounts. It's like this: my son wants to study in CA final, sir is not going to take fees. That's an employee benefit, right? Now, even though I've quit the job 20 years back, my broker still treats me as an employee and he does not deduct brokerage on mine. So for me, even a 50 paisa deal is an opportunity, but it may not be for you, right? And brokerage is different for different people. So we can't take that into account. वो उसके लिए हमको क्या करना है? Every person ना will have a separate column called brokerage, जिसमें वो ब्रोकरेज कैलकुलेट करके रख देगा. एंड देन ही विल सी दिस आर्बिट्राज माइनस ब्रोकरेज, इज इट गिविंग हिम प्रॉफिट्स? इफ यस, एग्जीक्यूट. इफ नो, डोंट. बट I mean, your brokerage might be high, mine is low. But can we argue on the fact that is there an arbitrage opportunity here or not? No. यहाँ है 9 रुपया, तुम्हारे लिए नहीं हो, तुम्हारा किस्मत है, but arbitrage तो है, right? So we don't consider transaction cost. Tax is not an implication for me at all, because remember, tax you pay on the income, right? So even if I get 5 paisa as a finance professional, I will take that 5 paisa in, क्योंकि 5 paisa का 30%, you know, that 1.5 paisa is tax, but फिर भी बचेगा ना. What we have to consider is the transaction cost, but which we don't, because it varies from person to person. Okay. Now, let's do something. Let's go back here. अपने को sum practice करना है ना? So I'll tell you how to practice sums. Let's say HDFC Bank. Okay. Let's take the यहाँ पे ला देता हूँ मैं इसको, ठीक है? Let's say, let's take some conditions. Spot is, let's take whole numbers, 1541. Let's ignore the decimals. Spot is this price. Now, let's go to derivatives, option chain, and this is 26th October. So that means time is 26th, 13 days. Okay. Achha. Now let's look at any strike price. Let's look at 1540. X 1540. Okay, let me just 1540, and iska call ka premium is 25 rupees 20 paisa. So call, let's take 25. I mean, once you gain mastery on this, then you will realize that even if we take that 20 paisa, we can calculate it. And put it's 20.55. No, so let's take it as 21. And सवाल यहाँ पे उठता है, right? R, let us take as 6% per annum, right? And number of days in real life, we take 250 days. Market 250 days का ही चलता है ना, right? But let's not get into that. We will take as 365. We'll take it as 365, right? Now, can you tell me whether any arbitrage exists for this data? No, R we can take it as 360. Normally we इसमें take it as 360, 365. कितना आ रहा है? 1562. हाँ? एक मिनट, 25 plus
1.36.7.
15337 चलो 36 point चलो 72 तो कितना होता है 1562 72 एक मिनट रुको नाउ यू रियलाइज मार्केट इतना जल्दी आर्बिट्राज आपको छोड़ता नहीं है एंड इसमें आई टेल यू देर अबाउट 1.5 month बैक देयर वाज आर्बिट्राज गोइंग ऑन इन दिस पर वो हम लोगों ने सब खा पी के नक्की कर लिया है हो गया है मार्केट छोड़ता नहीं है ये देखो मैच हो रहा है ना टेक्निकली स्पीकिंग इसमें आर्बिट्राज है बट इफ यू कंसिडर द ट्रांजैक्शन कॉस्ट्स देयर इज नो आर्बिट्राज दैट मींस द मार्केट इज परफेक्टली गोइंग ऑन but academic reasons there is still an arbitrage profit of 0.28 है ना just argument sake है क्या करोगे what will you do for this arbitrage you're going to buy this and you're going to sell this which means you're going to sell put with a strike price of 40 inflow outflow and if you sell a put you're going to get an inflow of 21 then what are you going to do and isme there is one more cost which can arise or which may arise what the rest of the brokerage and all will arise transaction cost but there is one more transaction which may arise remember you are selling stock
SLB.
selling stock what if you don't have the stock then you have to go into that SLB module there will be a charge there for borrowing the stock but that is only applicable if you don't have the stock if you have then no need right that is why I said brokerage and all you will have to incur but this may or may not arise okay now sell stock if you sell the stock you will get 1541 then buy call if you buy call 25 and you will remember you have sold the stock invest in PV of X that is 1536.72 and then you go about this arbitrage right now understand why I'm showing you this is I'll give you one sum at least as homework today but you can just pick up any data all you have to do is presume the R. Achha, now in real life, we don't do this. In real life, you don't do this. In real life, you know what we find out? R. Because, see, the market gives me this. The market gives me this. Market gives me this. Strike price anyway, I know. Number of days, I know. So, I find out what is the R being generated in the market. For example, in this HDFC wala thing, what is the R being generated in the market? 6%. Right? Now, supposing bank are giving me 9% interest, what do I do? Essentially, what I need to do is extract money from the stock market and invest it in the bank. Now, how do I extract money from the stock market? By buying stock or selling stock? So I'll do this strategy, sell put, sell stock, because you have to sell stock, which means you have to sell put also. That portfolio entirely you have to sell. Which means now I'm basically extracting money from the market at 6% and investing it somewhere at 8%. But what if it was reverse? The market was giving me 8% return and bank se paisa mere ko 6% mein milta hai. Borrow. That means you will borrow PV of X, right? And you will buy stock. Buy stock, matlab you have to buy the put. So buy put buy stock, sell call, borrow PV of X. Now here, remember, you're not arbitraging technically on prices. What I you are basically arbitraging on R. हम रियल लाइफ में ये देखते हैं कि स्टॉक मेरे को कितना R छोड़ रहा है ये, एंड देन वी डिसाइड टू डू अकॉर्डिंगली. समझा? ओके, एक मिनट रुको. अरे पैक कर लिया क्या? मुझे जस्ट एक सम देना है, वो होमवर्क में कर लेना. आई जस्ट गिव यू, लेट्स से spot rupees 170, strike price rupees 150, call 25, put 15, R 7% CCR है, 7% CCR है. ठीक है? N 3 months. ओके, एंड आर्बिट्राज प्रॉफिट आप प्रूफ करोगे मार्केट प्राइस ऑन एक्सपायरी 700 और 8 रुपीस. ऊपर 700, नीचे 8. ठीक है? करके लाना, फिर विल वेरीफाई इट इन द नेक्स्ट वीक. Online people, any doubt? चलो, हो गया तो निकल सकते हो. लेट्स लॉग आउट.
It's